Welcome back to Finance News, the only show you need for all of the week's best stories across business, finance, and the investing world. Even if your super yacht's been seized or you can't leave your house to buy anything because all of your cards don't work, sit back, relax, and enjoy while we get straight into your headlines. Russia threatens to cut the West off from critical supplies of energy if they're not paid in rubles. An order from President Putin has sent shockwaves across Europe, who rely on the supply of gas to fuel homes and businesses across the continent. Germany, who's one of the largest recipients to the supply, has deemed the threat blackmail. As of writing, the supplies remain intact, although Kremlin spokesperson Dmitry Peskov has said that the decree would not affect shipments that had already been paid for, so it only becomes an issue during the second half of the month when the new monies are due. Countries deemed unfriendly for imposing sanctions on Russia over its war in Ukraine can continue to pay in foreign currency to a Russian bank that will then convert the money into rubles. Mr. Putin said Russia would start accepting ruble payments on Friday and contracts will be stopped if buyers do not sign up to the new conditions, including opening ruble accounts in Russian banks. Over in the US, President Biden has announced this week that he will be authorizing the release of millions of barrels of oil into the market. The US president said that he'll be releasing up to 180 million barrels of oil over the next 6 months from the Strategic Petroleum Reserve in response to the rising energy prices throughout the country. The move marks the largest ever since the reserve was created back in 1974 and sparked the cost of oil on the open market to move downwards. Analysts suggest that the move will not fully resolve the long-term crisis, even at a rate of 1 million barrels a day. However, Mr. Biden promised further action if required and said that this move would act as a bridge until the end of the year when domestic production would ramp up. He also called for companies to pay extra if they chose not to use oil wells on land that they lease from the government, as well as investments to speed up the adoption of greener energy sources. For some perspective, the strategic oil reserves currently hold around 568 million barrels, down from their peak of 700 million in 2009. Each barrel of oil is about 0.8 meters high, so 568 million barrels is 454 million meters. There's 1609 meters to a mile, so stacked on top of each other, that's 282,000 miles, which is more than the distance between the Earth and the Moon, which is 238,855 miles away. Fun fact for you. Investment bank Goldman Sachs is letting its wealthy clients get into the cryptocurrency space. It plans to offer its high net worth clients access to digital currencies like Bitcoin and Ethereum through a partnership with company Galaxy Digital. The bank had partnered with the company on its Bitcoin futures offering and will now likely see a finder's fee for every client account sent to Galaxy. The bank's analysts think that assets like Bitcoin have strong potential as a means to store value against others like gold who operate in a similar space. Currently taking up around 20% of the current store of value market, they suggested it could climb to more than 50%, where in theory it would be worth more than $100,000 a piece. Now I've just got to find an old Bitcoin wallet and a hard drive on the computer that I threw out years ago. Tesla, the electric car giant, has confirmed this week that it seeks to create another stock split soon for shareholders. Elon Musk's company filed this week that it seeks a final board approval to split the stock of current shareholders for the second time in the last couple of years. The action comes as demand for the stock has increased pricing to levels that can prohibit retail traders with smaller accounts or those with no access to fractional trading. Furthermore, the reduction in share price allows greater liquidity for options traders who frequently trade Tesla on the open market, as the contract size of 100 shares will no longer take the value out of most investors' portfolio size. We don't yet know exactly what size the split will be and how many shares will be provided to shareholders, but many analysts are speculating 4, 5 or even a 10-way split, which will take the shares down from the current share price of $1,087 to around $108. The news this week sent the share price rallying, increasing the winning streak from a recent 25% increase in the month so far, as it coincided with the opening of the Berlin factory reported on the week before. Now time for some UK news closer to home. Martin Sorrell's company S4 Capital has delayed the release of its accounts for the second time. The advertising business, which had previously been on a seemingly unstoppable rally last year, has recently been falling in price with the wider market, although the news sent the price tumbling this week as investors reacted nervously to the news. The auditors, PricewaterhouseCoopers, said that they were unable to release the results without giving a significant reason, although the auditor had said earlier in the year at the start of March that the impact of the pandemic had led them to have lower levels of resourcing, particularly in the Netherlands. S4 said on Wednesday it would release its results for 2021 as soon as PwC had completed their work. It added that it believed the results for 2021 remained within the range of market expectations and continued to trade strongly in the first 2 months of 2022. S4 currently sits at 320p a share, down from over 60% from previous 2021 highs of 870p. Business confidence in the UK has fallen again in March. Lloyds Bank reported that business confidence levels have fallen by 11 points to 33% on their own business barometer, as inflation in the UK takes hold and economic worries hit the market. Businesses they surveyed showed that trading prospects and economic optimism were both lower, slumping 11 points respectively. However, the decline this month was lower than the drops in confidence in the first 2 months of the pandemic, when it fell by 17 points and 38 points. The reading also remains above the long-term average of 28%. Just 3 of the UK's 12 regions recorded increases in confidence, with London increasing by 13 points to 60%, Yorkshire and Humber up 6 points to 57%, and the North West rising 1 point at 45%. And finally, in your headlines, UK energy operator National Grid has had a controlling stake of its business acquired. The gas supplier, once nationally owned in the UK, has had a 60% stake in their business acquired by Australian giant Macquarie. The deal will see the firm receive £4.2 billion, valuing the transmission and metering business at £9.6 billion. The Australian group, the world's largest infrastructure investor, has teamed up with a British Columbia Investment, one of Canada's largest asset managers, to move forward with the deal. The deal means Macquarie will take over 7,660 kilometres of pipes, transporting gas to heat homes and power industry and electricity generation across Britain. The consortium has also an option to buy the remaining 40% stake from National Grid, the FTSE 100 company that controls the national electricity transmission network here in the UK. And now, time to look at some of the funnier things going on in this space, because there's always way too much doom and gloom going on in the markets. Just when you think it couldn't get any worse, fails of the week. This week, energy customers around the country have been struggling to submit gas and electricity meter readings a day before prices are set to soar when the price cap is raised. Users reported being unable to access the websites of energy giants such as British Gas, SSE, Eon and EDF to submit their meter readings. On Twitter, Eon took aim at money-saving expert founder Martin Lewis, who has encouraged consumers this week to take their meter readings before tomorrow to save money. In a tweet that's since been deleted, Eon said, "Unfortunately, the website and phone lines of every supplier are being hammered again today. Martin has once again created unprecedented demand, bringing down Britain." That's right, blame Martin Lewis for your infrastructure failings when you can't even submit a simple online form for a website. Makes perfect sense to me. Anyway, long live anyone on a fixed price deal for the next year. I'll have to see how my bill looks next time. Now, time to wrap things up in your favourite section, where I've scoured Reddit Wall Street's bets to bring you only the finest memes for public consumption. Welcome to the best of the bets. In a very timely note, this poster has clearly been all wrapped up in the excitement of this year's Oscars ceremony. He conveys the message that if you're a diamond-handed investor, then at least you can do is use those hands against people you don't like. Be careful, it might hurt though. Keeping on the theme of diamond-handed investors, people are still clinging onto the hope that the mother of all short squeezes can still happen. If enough people believe it for a long enough amount of time, I'm pretty sure it comes true. Anyway, let's get you to bed. You're looking pretty tired. If you need tips on what to buy and make money, this one might help. You just post a happy meme when it's green, and then you post a sad one when it goes red. Don't worry about that number that says profit or loss. Just enjoy the ride. And we'll end on this one because it's pretty funny. YouTube is full of grifters who exploit your weakness to want to get rich quickly and always claim to have a way to make you money and infinite passive income, because seemingly it's all really easy, especially day trading. Oh, but if you want to find out, you have to buy their course first, which they make more money from than actually trading. Honestly, it's genius. Anyway, on that note, thanks so much for watching. Drop me a big like if you've enjoyed it. Subscribe for many more. I will see you in the same time next week. And as always, happy investing.